Kia ora. My name's Jared Kerr. I'm the Chief Economist of Kiwibank, and I'm joined by Mary Jo Vergara, Senior Economist at Kiwibank. We've had some good news. It turns out that inflation has peaked and it looks like it's going to continue to decline. In the latest reading that we saw for the first quarter of this year, the annual rate of inflation has fallen from 7.2% to 6.7%. It's still running hot, but it's moving in the right direction. The inflation that we are getting from offshore, the prices that have been generated overseas, particularly petrol, has fallen, and the pressures internally look like they're cooling. MJ, you crunched the numbers. What did you see, and what did you think?
Yeah, I mean, the biggest surprise really was on that imported inflation side. We had seen tradables inflation fall from 8.2% down to 6.4%, so that's a pretty steep fall. It is a story we're seeing overseas, that sort of disinflation, and we're seeing it now in our own data.
So, what does it mean for monetary policy? I mean, I think most of us realise that interest rates are rising and may still rise further. What are your thoughts on monetary policy?
Yeah, well, the fact that core inflation, so that underlying trend inflation, looks to have peaked and that it's actually beginning to ease, I think suggests that the Reserve Bank's actions to date are having that intended effect on dampening demand. We still think that they have more to do in terms of another rate hike in May. That's what they've signalled to us, their latest policy announcement. But we think they are nearing that end of the tightening cycle.
Yeah, and that's important. Financial markets are reacting. We've seen a peak in wholesale interest rates, and financial markets are actually starting to price in rate cuts by the end of this year and into next year. So it looks like interest rates, they've risen a lot and might go a little bit further, but actually they're peaking. And we think that interest rates will be actually much lower this time next year. What do you think about the currency? What happened there?
Well, we saw that with those rate cuts being priced in, that expectation the Reserve Bank doesn't have to do as much. It actually weighed on the New Zealand dollar, and we actually saw it fall immediately following the CPI release. So I think looking forward, there are a lot of things weighing on the New Zealand dollar. Globally, recession is a high probability, and in that environment, the Kiwi dollar doesn't usually do very well.
No, and a falling Kiwi actually helps the New Zealand economy. It makes us cheaper for the rest of the world. So we think that the New Zealand dollar is going to decline over the year and probably end this year around 55 cents. And that would be good news for exporters. It would be good news for our tourism industry. It means New Zealand goes on sale, and it would definitely help with our economy heading into next year. And what do we think about the Reserve Bank? Like, what's the Reserve Bank's move into next year?
I think what we've got is similar to what pricing is in markets. We are expecting that the Reserve Bank will be in a position later this year to actually cut interest rates. We could wake up 6 months down the track and economic growth will be much cooler than it is today. Inflation is getting to that 2% target into next year, and the labour market, unfortunately, I think would be starting to loosen. So in that environment, I think it gives the Reserve Bank impetus to actually start easing monetary policy.
All in all, this is great news. We've seen the peak in inflation, so price pressure is going to ease from here. We think we've seen the peak in interest rates, so hopefully interest rates will decline into next year, and we think the currency is also going to decline into next year. That will provide a significant tailwind for the New Zealand economy, better balanced growth into next year. There is light at the end of the tunnel. MJ, any last thoughts?
Yeah, I mean, we've seen a lot in our economy over the past 2 years, and I think we're closing a chapter on that tightening cycle and opening up a new one into next year.
Thank you for joining us.